Okay, now that we have an idea about the payroll time card, let's talk more specifically about the taxes that are withheld from our employees' paychecks. Remember, we showed you the picture in the first section of the paycheck, and we wondered why certain taxes and certain amounts were taken out for certain taxes. And that's what we're going to dive into in this section. First, let's define some basic topics. Payroll taxes are simply the taxes that are assessed on payroll. Now, that can be for the taxes for the employee, the person who works for you, or it can be taxes that are assessed by on the owner, the person who runs the business. And we'll get into the owner later on, but we're going to specifically just spend a little bit of time talking about the taxes that the employee has to calculate, or the employer has to calculate for the employee, if that makes sense. Payroll then is obviously the total amount of money that is earned by its workers. And remember that businesses are required to hold back those taxes that the employee has to pay for each paycheck. And what they do is after every quarter, every 3 months, basically what they do is they take those taxes, hold on to them, and they pay them to the government. We'll get into that in the next chapter. The first tax we got to talk about is a little bit more difficult than just taking a number and multiplying by another number. It's based on the form, the W-4. Now, some of you are familiar with this form, and some of you may not be. But the W-4 is basically the form that's used to tell the employer, the boss, how many allowances they have, how much they should take out of every paycheck, and it's kind of an estimate. Most of you, because you're high school students or you're students, you're going to write exemptiveness. But every time you have a job, you have to fill out the W-4, and this helps the employer determine how much he needs to take out of each paycheck. So we fill out the W-4, and you'll notice that this person hasn't filled out the exemptions, but it's based on your marital status and how many allowances you have. And let's define what those are a little bit. Allowances are simply the people that you're legally supporting. Now, some people cheat with this, and obviously it has to make more sense. The more allowances you have, the more people you're responsible for. So the government says that you get to keep more from each paycheck. You don't have to pay as much in taxes. So if you're single and you have no allowances, you're usually paying the highest amount that you can in taxes to the government, because you're only responsible for one person, that being yourself. Okay. So obviously, again, the last part of it is the more allowances you have, the less taxes are taken from each of the paycheck. So what we need to do is, if you'll go ahead and look at pages 347 and 348 in your textbook, those are our allowance, or are the withholding taxes for income tax. Now on 347 is the single person. On the next page is the married person. What they simply do is they go down and they find out what number they make per paycheck, per pay period, and then slide over the number of allowances. So let's take an example. In the textbook, if you'll slide your finger down, let's pretend that you make $950 every paycheck and you have 0 allowances, so you're only responsible for yourself. Take your finger down, and you'll notice that it is at least 940, but less than 960. Take your finger over, and it says $111. Well, that tells the business that every paycheck you take out $111. Now, if you do the same thing and we pretend we're married and we use the same number, 950, you'll notice that it's taking out much less. It's only taking out $63. So, again, the more people you're responsible for, the less they have to take out in taxes. Now, how do we determine then the total amount taken out at the end of the year? When it's tax time, we actually go to the tax tables as an individual. It takes a second here to load up. But at the end of the year, when it's tax time, the owner sends you a sheet in the paper that's called a W-2, and you compare this with the amount on the tax tables, and if you've paid more, you get a refund. If you've paid less, then you got to pay the government. For example, if we look at the very bottom down here, and everybody goes to the very bottom to see how much the high-end people really have to pay. But let's pretend that we make $98,000 a year. Now, the difference between the tables you're looking at here and the tables in the textbook, the tables in the textbook are per pay period. The tables you see in front of you are the ones that are for the yearly income. So let's pretend we made $98,000 this year. Look here, you're single, you roughly have to pay about $21,000 in taxes. So again, it's pretty expensive to be single and not have any allowances. So that just gives you a little bit of an idea about where they come from. Now let's go in a little bit more in depth. So you now know, if you look at your, we know how to figure out the federal income tax expense now. So the federal income tax expense is based from allowances, based on our W-4, if we're single or married, and we're calculated from the table. The second tax then is the FICA tax, the Federal Insurance Contributions Act. Now there are two parts to this. The one part is Social Security, which is the socialized basically retirement plan, and the other one is Medicare taxes, which is technically a socialized health system that helps pay for health benefits. So we calculate those. Those are all based on gross earnings. So there's that term we used when we talked about in Section 1. It's all based on how much they make before they take out the taxes. Social Security is 6.2 of gross earnings. Medicare taxes is 1.45% of gross earnings. Now, we'll talk about tax bases later on, but you'll notice that in the textbook the tax base is 87%, and in 2014 it was $117,000. So we'll come back to that later on when we start to figure that out. But what we do is when we're calculating this, we calculate the gross earnings times 6.2%, and Medicare is 1.45% of the gross earnings. So what I'd like you to do is I would like you to go into and do the on your own on page 350 and see how you do as far as calculating the taxes. And we'll come back after you complete that.